Welcome to Markets Now. I'm Michelle Rook along with Scott Varilek with Kooima Kooima Varilek. Seeing mixed trade in both grain and livestock futures as we move through the mid-session this morning. And I want to start off talking first, Scott, about corn and soybeans moving in opposite directions. Corn, though, sharply higher, soybeans lower. Are we unwinding spreads or what's going on there today?
Yeah, thanks for having me. And moving in opposite directions, what they have. I mean, it was such a sharp move. In general, with the beans moving straight up with their acreage number and corn heading straight down, and the disparity between the two was mind-boggling. It's not something that you often see. So to me, unwinding in general here, it could be spreads, just could be outright positions here. But I think for the soybeans, that's probably the best news that you're going to get for the year. You had the poor crop ratings. You had the 83 million acres coming up severely short from what the estimates were. So I think then, couldn't break the $14 mark, as you and I have kind of mentioned. And that's all we've got. So I think we see the weather changing. We see some cooler, wetter temperatures. So the weather's looking a little bit to the negative side for some of these grains, in my opinion. So that could be the best news that we've got. Could put a little bit of a top in for the soybeans until we get further down the road and look at that August weather, what that's going to do.
But corn, let's also talk about the fact that we couldn't close below the May lows that we made. And, the corn market looks over here at the drought monitor. You still have 67% of corn areas in some level of drought. So doesn't that give the market a little bit of a push, or at least hold it together for the time being?
I think that could be why it's holding at least the $5 mark as of now, but that's a big acre number to swallow. So It's going to be tough to overcome, that kind of number. And like somebody said it to me this morning that I really appreciated it. It was, a drought now is a lot different than a drought was 10 years ago. I think we've just got these increasing genetics potential. So it feels like we still have some chance. We're still on July 6th. If we have this weather pattern shifted, some moisture is really going to give these grains a nice shot in the arm. And I think the corn's got a lot of time to kind of pull around out of this. And we still have some pretty good, large areas of the Corn Belt that are doing pretty well. So I think we're only going to start to see a little bit of improvement on some of those crop conditions as we move forward. So trying to tell the future, especially when it comes to weather, that's very hard. But it looks to me like the options are getting cheap enough in the corn market where I don't have to worry necessarily as much about my risk on the long or the short side, whatever side I need. I can use some options and probably sleep pretty well at night. So it looks like it's trading calmer and a little bit more of a holding pattern, giving me some more opportunity. I don't expect that as wild of swings here.
Yeah, until the WASDE report next Wednesday, maybe we'll see.
Maybe.
Let's talk about how the corn market, obviously that big pullback helped to push the feeder market last week. I think we gained like $13.50. We hit new contract highs this week in both live and feeder cattle futures, but we've been down the last couple of days. Is this just this normal healthy correction that we've been seeing in this market?
I'm still viewing it as a healthy correction. Coming from record high territory and as fast as we rallied, obviously when we do take corrections, they're going to be swift and they're going to, come when we're $3 lower and $4 lower. It's odd to say that that's a healthy correction day, but and then it's on a gap lower day. But we are coming into a time of year where we can get a little bit sluggish on the beef demand. So I think it's just the time of year where you're not finding some funds or some longs that really want to dive into the market here. We're going to have to crawl just a little bit further into these, what we're going to call dog days of summer. And somebody says it's BLT season, I guess, but I would say the odds are that I'm going to eat about 100 steaks before I have a BLT. So if that changes anybody's mind, but we do see that pullback in demand right here. So I think that that's expected. We're going to need to crawl just down the calendar just a little bit and see some of these funds unwind some of these contracts. We've got Goldman Roll next week. So August live cattle, there are going to have to be some positions that need to come out of there.
Yeah, so there's been some profit taking, but has there also been some hedge pressure when we got up into these contract high areas again? I mean, you could kind of expect that.
Yep, there is some hedge pressure happening because we've had such a bullish story to get behind, and we're all talking about how tight the numbers are and what the future looks like. Yes, we're moving higher. The bullhorns were out, but when you do see a correction and you see some of the prices that we're at, we have to check. Okay, how much risk do I have dangling out here? The price that we're paying for some of these feeder calves is record high prices. So you have your risk level is very high, especially with your higher interest rate on top of it. So having to try to find some way to protect yourself. So find some kind of floor. Okay, we're all starting to analyze our plan. How many hedges do I have on? What do I need? What's my risk? We can't afford to have a major drop from here with how much money in dollars we have tied up into these feeders that we have right now.
Absolutely. Cash trade, we haven't had a lot, but what have you seen so far in terms of cash? What are you expecting for the line share of the trend this week?
It's hanging on pretty good. We've had some 184 trade to a regional in the north. There's been some 182 bids from majors. It seems like everybody has the call in for 290. It was just a regional, but it's starting to sound more like, I think there are several packers that would sure take some cattle off your hands for 290 here and put a little time under them. So the packer is still very interested in finding your cattle and trying to get them locked in. They're going to try to, keep it close to the vest, as we do have a board that's getting a little correction, and maybe that's going to help the packer as we can break this market for them a little bit here. So there was some 280 in the south with some grid premiums attached to it. So I'm going to call cash okay. Those northern bids are still hanging in there north of $1.80, and we've got a August board saying, yep, this is I'm in the summer low time frame is what August is saying. So I think it's accurately priced in that area. We've got carcass weights light. So we've been actively selling cattle, and the producers are very current. So they've been diving into the pens, and that's part of the reason the packer's still looking for some cattle, because we are as current as we are and diving into the yard. So wanting cattle, but not wanting to go crazy because they might not find a lot of cattle. If they'd bid a bunch higher, they're still not going to buy that many more cattle because they're just not there. Okay.
What about this hog market, man? We have had quite a run off the contract lows. August, I think, a $27 run from May 26th up to the high today. We're above $100 in the August contract, but how much more upside is there? I mean, has this been just a demand push, or has this been an artificial push, or what's driving it?
Yeah, I wish I could really lean on the demand push. I mean, part of it is there was quite a bit of buying ahead of Prop 12, but a lot of the traders really thought that this was the move that was going to happen a couple of months ago, and then it did not. It washed several of the traders out as we drove lower on Prop 12's coming news, and now we've done what they thought it was going to do, but just later. Prop 12, we get to that July 1 time frame. I think there was so much anticipation of it and just the nerves wrapped around it that now that we're here, some of the nerves we're moving on. We're able to kind of creep back to a level that maybe the hogs could have been, should have been. We're there. We are seeing some cheap isoines around. So did we have large sow liquidation or did we not? Then why are the isoines so cheap? So yeah, some of these deferred contracts are keeping quite a discount to what these fronts are trading. We may have moved enough hogs up front to keep the tighter numbers up front, but it looks like we're going to have adequate supply as we move down the road later into the year.
Yeah, that's probably why we have those bull spreads continuing to kind of work there. All right. Thanks for joining us, Scott Varilek with Kooima Kooima Varilek. That is Markets Now.